So happy Friday to everyone and welcome to Business Basics Friday. I am Safie Russell, founder and CEO of SDR Consulting, Inc. A little background about myself. I've been in the industry going on my 20th year, and I'm a CPA and enrolled agent. We're based in New York, but we have a virtual practice, so we work with clients all over. And we mostly work with small business owners, helping them with business startup and business cleanup services, as well as tax resolution for those who've gotten into trouble with the IRS or state. And so today I want to welcome you to this discussion regarding the new reporting rules that would apply to PayPal and Stripe and some of these other merchant accounts out there. It's been a lot of talk about this, so I'm sure it's a popular topic. So feel free to, share this live, share the Clubhouse, invite a friend here, and we will open up at the end for a Q&A. I'll do my best to answer questions that you may have, but the goal here today is just to give an overview of the changes and give a little clarity out there. So bear with me 1 minute. I just want to go ahead and pull up my live and so I can get to questions quicker and make sure everything is on track. If you're here joining us live, feel free to comment below where you're joining us from. There we go. Here in New York today is rainy. Temperatures are dropping. And so, it is what it is. It's New York and it's February 2022. So wherever you're joining us from, feel free to comment below and share a little bit about what the weather is like there. All right, so I'm going to go ahead and share some slides. And so if you're here in Clubhouse, definitely the audio portion you'll be able to hear. And if you want to hop on and see the visual, you can join us on Facebook Live at SDR Consulting. That's where you can find us. So I'm going to go ahead and share my screen and we will get started. Okay, so we should be in good shape. Okay, so Business Basics Friday, find out why you have to report your money from PayPal, Stripe, etc. As I mentioned, I'm Safietou Russell, and my conclusions are based on the facts and assumptions as stated and authorities that are subject to change. Got to always have the disclosure in there. All right, so first, I just want to mention that the form that is going to be issued regarding these payments is called a Form 1099K. It's a payment card and third-party network transaction form. This form has actually been around and been in place since calendar year 2011. So it's not a new reporting. What has changed is the threshold of reporting. So it used to be that if there were transactions going through a merchant that was more than $20,000 in sales and more than $200, more than 200 transactions for the year, then these companies such as PayPal and Stripe would have to issue this 1099K to the recipient as well as to the IRS and report that money. Now, as you know, there's a lot of small business owners that I'm sure are here, and you may not be at that point where you have 200 transactions, or if you do, it's not too many thousand in sales for the year. So, of course, some business owners out there, some side hustles, were not reporting income. And because the threshold was so high, there's money being lost. So long story short, the American Rescue Plan Act of 2021 modified the law as it relates to this reporting and lowered the threshold to $600 in a calendar year without regard to quantity of transactions. So you could have 2 transactions, and if it's over $600, that company, whoever took your payments, Stripe, PayPal, eBay, if you're selling products online, you're now going to have a tax form related to those sales. All right. So it's the reporting of the gross amount that you that went through these merchant accounts, and the entities that are subject to this reporting are called payment settling entities, or PSCs. Okay, and so there's certain companies that fall under that, and for the most part, if you're working with someone who is providing you the ability to take payments by card, they most likely fall under these requirements. So a PSC, or payment settling entity, it could be a third-party settlement organization, or otherwise known as TPSO, or a merchant acquiring entity, which we'll just refer to as merchant. So some examples of a TPSO, the third party, organization is eBay. So if you sell items on eBay, eBay collects the payment for you and then deposits the money into your account. So they collect the money from the customer and then they put the money in your account. That's an example of a TPSO. A merchant, as an example, would be if you have a local storefront that has a POS system and accepts credit card payments, then you likely have a merchant account attached to that. This reporting applies to debit, credit, and stored value cards such as gift cards and prepaid cards. Okay, so if you have the ability to take those type of payments from your customers, then these are the type of payments that apply to this 1099K rule. So 1099K reporting only applies to businesses and it is effective for calendar year 2022. So that means come tax year, come 2023 for tax season 2023, that is when you'll start receiving the forms for whatever happened this year. It does not apply to personal transactions. So the key here is that depending on, the payment processor you're using, it's going to be really important to separate business related transactions from personal transactions. It was already important, but it's even more important now, especially if you don't want personal transactions being reported to the IRS as income. So, some payment platforms such as PayPal and Venmo, they have a feature where you can indicate if it's a payment for a good or service. That would be a business related transaction. If it is not indicated as for payment for good or service, then it would be considered personal. And so those transactions would not be subject to this rule. So if you're going to have money coming in from family and friends or reimbursements of some sort that are personal in nature, you want to be sure that it's not going through as a business related transaction. And even more, those type of payments you should just take in your personal accounts without using any of these type of merchant services, or make sure those accounts are connected to personal accounts and separated from your business completely. If you're a business owner, you can have a PayPal for business and a PayPal personally. Same thing with Venmo. So that's why it's even more important to not commingle and have, one account for everything, because now you're going to get into some territory where you're maybe overpaying taxes or fighting with the IRS. Some of the vendors that this applies to: Amazon sellers, Stripe, PayPal, Venmo, Etsy sellers, Airbnb hosting, and the vendors that go along with those different services. So this has a pretty broad scope. Uber drivers, a lot of people are going to fall under this requirement if you're making over that $600, and you just want to be prepared for it. So at the end of the day, you always had to report all your income, right? That part is not new. If you don't, it's tax evasion and it's illegal, right? So if you're in business for yourself, you should have been picking up that income regardless if it was being reported to the IRS or not, regardless if you hit the 600 or not, or the 20,000. And so if you were picking that up already, nothing changes here, except, which we'll get into, possible reporting issues and duplicate income issues. So if you were already picking up your income, nothing changing here. The IRS is not trying to grab money they weren't already supposed to have access to anyway. So some people may try to avert this by, using Zelle or using cash only, or trying to use the personal feature in PayPal and Venmo. And you know what? At the end of the day, it's just not worth it, right? If you're a heavy cash business, you're already, a target for the IRS. If you're using Zelle, maybe Zelle's not subject to this reporting because they're not a PSC. However, it's still a part of your bank account. It's still a trail. If you were ever audited, that money is going to be found. So it's just not worth it. All right. If you don't have bookkeeping in place, now is the absolute time to make sure you do. Why? Because as a business owner, you may be subject to the 1099 NEC reporting as well. So for example, if you do business with someone, you provide IT services to a company, that company pays you over $600. And under the 1099 NEC rules, they would have already needed to issue you a 1099 to show the amount of income they paid you. However, the method of payment is really vital here. Let's say you're a contractor, you're working with somebody, you're providing IT services. If they paid you by Zelle or by cash or check, they would issue you a 1099. You would pick that income up on your return, regardless if you got the form or not. But let's say if they paid you by PayPal business PayPal, you sent them an invoice and they made the payment. Now you're going to be subject to the 1099K rules. But what if they don't really know the nuances of those two different forms and they still issue you a 1099? Now you're going to have income reported to the IRS in duplicate. You're going to have the amount from your PayPal merchant account through the 1099K, and then you're going to have this 1099 NEC from each customer, business customer that you worked with. So there's a major risk here of being of having income reported to the IRS in excess of what you actually made. And how would you really know if it's in excess if you don't have bookkeeping in place, right? So when you get these forms next year by January, now you got to sit down and say, all right, here's the income I really made. Here's the income being reported in all these forms. Am I meeting the number? Is it, less than what I'm reporting, or is it more than what I'm reporting? And now you got to kind of go back and forth with those business owners who issue you those forms that may have been an error. So it's really vital that everyone understands the rules related to 1099K as well as 1099 NEC, because there can be some interplay between the two. Let's say you have someone who pays you part of the year through PayPal, part of the year through Zelle. They're going to need to split up the reporting. The 1099 NEC should only have the Zelle payments on there. Or if they just issue a 1099 NEC with everything, your 1099K is going to also include that income. So as you can see, you can end up overpaying taxes because you don't have proper record keeping in place. All right, so just to recap, what we talked about in this session today, and then we'll open up if anyone has Q&A. The 1099K has been around over 10 years. What has changed is the reporting requirement of when that form has to be issued from these merchant accounts such as PayPal, Venmo, Stripe, Airbnb, etc. It's now $600 in a calendar year, no matter how many transactions you've had. So if you're doing Uber, if you're doing, what's the grocery delivering one, Amazon Fresh or whatever it is, any position where you're self-employed, and you're accepting payments by credit card, debit card, or prepaid card, these new rules can apply to you. And so no one is trying to, make you pay more than you're supposed to be already. Once again, you were supposed to be recording this income anyway. It's a matter of finding the loopholes and finding the people who are not properly reporting. So, avoid those workarounds that you may see floating out there in social media space about using Zelle only or doing cash only. Not worth it. Like I said, at the end of the day, just pay your taxes, but don't overpay. Make sure you have your proper record keeping in place so that in the case where you are issued these forms in error or the amount is in error, that you won't be caught off track paying too much. All right, so that is a quick overview of those 1099 rules. And let me see if we have any questions here. Hi, DeJoanna, I'm sorry, I don't want to mess up your name, but hi there from Florida, sunny and warm. I'm jealous. Thanks for joining us. All right, so if anyone on Clubhouse has any questions regarding that, feel free to raise your hand. I'll stay on for another minute or so. And one thing I will mention, being that we are in tax season 2022, is that those 1099 forms for 2021, the 1099 NECs should be rolling in. So you also still want to check those, even though the 1099Ks aren't around yet. Check those 1099 NECs because some business owners don't have proper record keeping in place, and the amount they're reporting to the IRS may not be right. So if you don't have your own records of your own that you can verify those 1099s against, you may want to take a step back and don't just take it as is, because I've seen some stuff where people are scrambling to get numbers to you and they may not be accurate. All right, so we have a question here. One second. All right, it's Christopher Smith. How you doing, Christopher?
Hey, I'm doing okay. Can you hear me okay?
Yes, I can hear you.
All right, good. Hey, so I've got a quick question, and it's about the accounts that are being set up, like the Venmo or the CashApp. Those accounts are being set up.
Hmm.
So a lot of the times, some of the business owners, small business owners, they may have those accounts set up in their personal names, right?
Yes.
And how, and I'm trying to, identify and advise people on this matter, but
Mm.
how is that going to be
Mm-hmm.
right?
Mm-hmm.
How are they to determine what's business and what's personal?
Mm,
That gets reported on that 1099K.
mm-hmm. Mm-hmm.
Albeit, I will say it's probably their own fault for co-mingling. But
Right.
having said that, if you could respond, that would be good to know.
Yeah, it really depends on which merchant they're using, but let's say it's what's the one you mentioned? Was it Cash App?
Yeah,
Right.
let's start there.
Right. So Cash App has a personal nature and it also has a business. And it does ask you somewhere in the setup which type of account it is. Or if you're using it too much and your dollar amounts are too high, they'll just convert it to a business. So it's important when signing up for these accounts, you're using the appropriate entity and EIN or social security number when you do the sign up. But if that changes along the way, and if you are commingling, it is going to be an issue because once it's flagged as a business account, everything that runs through there, and Cash App, for example, there's no way to differentiate, from my understanding, in Cash App what's personal versus business. So once that account is converted to business Cash App, everything's going to be considered business. So it's important just to kind of separate it. I have Cash App, I don't use it often, but I have one for business and I have one personally. And whenever people are sending money, you got to use this number or you got to use this email so that it doesn't, intersect. I've seen where people have merchant accounts, like, when they were a sole proprietor, and then let's say they set up an entity later on, and then that account was never changed. The EIN was never changed. And so the only way to really fix that is to go back to those merchant accounts and, ask for a correction where possible. Because what's going to happen is if that income is reported under your personal social security number, but now you have a business and you're picking up the income over there, you're going to end up with an IRS notice because it doesn't match what's being reported versus what's on your tax return. So it's really important to look at your records, look at those accounts, see if your social is attached to it or your business is attached to it, depending on your structure, that can make a difference. But and then they just got to stop commingling. And now's the time. We're early enough in February in 2022, being in February, to stop it now, so that you can separate and not have those issues later on. Because people are going to come next year, January, and say, "Oh my gosh, that was my mother paying me back," and da 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 da. And I don't know that these companies are going to, say, "Oh, sit down with you and go through this as personal, this is business." They're not. They're going to leave it up to you to work that out with the IRS. So,
All right, I've got more, but
no, feel free. We're good. Yeah, go ahead if you have a second one.
you know, yeah, I mean, because the thing is, a lot of, recognizing it now,
Hmm.
a lot of small businesses, they don't have the items, right?
Right.
So they're small business in business,
Hmm.
hustling,
Hmm.
whatever, and
Hmm.
everything is attached to that social.
Right.
That is considered business income,
Yeah.
even though it is attached to the social.
Absolutely. Absolutely. And in the case where, even if okay, so let's say you're a sole proprietor, you don't necessarily need an EIN, right? Because at the end of the day, per the rules, you don't really need one unless you have employees. So everything's going to be picked up on your personal return anyway under Schedule C. Even if you are an LLC and you have an EIN, technically the way the rules are written, you're supposed to still provide your social because that's what the tax return is going to be under. That the LLC itself as a single member doesn't have its own filing. So at the end of the day, whether it's in your social security number or EIN, it's still business income. It just needs to be picked up accordingly for tax purposes. But if you definitely, have an S corp or a partnership structure, you want to be sure that those entities have your EIN and have your company name, because in those cases they do need to be reported on those specific entities and not under your personal.
Right, yeah. And so at the end of the day, it underscores the importance of not combing.
Yes, commingling is a big
Proper
no-no.
record keeping.
Proper record keeping, because otherwise you wouldn't even know if it's incorrect if you don't have your own records. Yes. All right, perfect. Camille. Hi, Camille. One second. See if I can get this technology to work. Okay. All right, Camille, how you doing? You're up. Good. How are you? Yes. I'm doing great. I'm doing great. How you been? Thank you. Yeah, sure. Thanks for everyone joining in. So today we recapped an overview of the new reporting requirements for the 1099K. The 1099K has been around about 10 years now. However, they've lowered the threshold to $600 in a calendar year, being issued on this form for payments that have been taken from debit card, credit cards, and prepaid cards of that nature. So, Cash App, Square, PayPal, Venmo, Stripe, Airbnb, eBay. There are a lot of different companies that are going to fall under this reporting requirement. And the main takeaway is that you were supposed to be reporting this income anyway, but you want to be sure you have your own record keeping in place. You want to avoid commingling because you can end up having too much reported. You can have more reported than you actually earn through your income. And so that's the main takeaway. And we're taking Q&A right now. So feel free to, raise your hand if you're here on Clubhouse, or I'm trying to watch the chat here on Facebook. So hopefully I'm not missing anyone. But yeah, that's the overview. Camille, you want to share anything?
Sure, yeah. So, hi, everybody. My name is Camille Mitchell. I am a project visionary for 25 years and a tax accountant for 25 years. And I support small business owners and with a specialty in trucking and the notary industry. And so, how does this affect us as a notary? There's a couple of things that I think Sophie already touched on it, that when you are setting up your payment methods and payment processes, then you're deciding whether or not you're PayPal, Stripe, Square, Cash App, Venmo, or any other payment payment processor, or any other payment processors that come available. You need to make sure that you are separating how you get paid for your business services from personal peer-to-peer transactions, right? So I have my Cash App, and my kids love it, hit me up on, and then I have set one for a business transaction. When you set up a business Cash App and business PayPal account, you will notice that they charge like a 2.9% plus 30 cents. That's the merchant fee. And so what happens a lot of times that those small business owners, they try to avoid that. They're like, hey, I need all the money I can get. It's important. I can't afford to get 2.9% plus 30 cents merchant fee. And so you will use the peer-to-peer for personal services, which is appropriate, but this should be under your business. So make sure if you haven't used payment methods and you have not been paying a merchant fees, or they don't take merchant fees out at all. Maybe you have a personal Dell account that's not a Dell account. I know some banks have a business Dell account, like Chase Bank of America. But if you're using any of those personal payment methods, you definitely want to stop, while you can, and change over to a business, and then make sure that you keep a record of what you have got paid so far this year, because that income is reportable to the IRS.
Yes. Thank you for that. Hopefully everyone could hear. And thank you for those tips. It really is important to separate those. And that is a good way to know if you do have a business one around. If you're getting those fees coming out, then it's a business account. There's not really any merchants out there right now, other than Zelle, which is not really falling under the merchant rules, that don't charge fees. So that's how you really know if you have a business account or not. Thank you for sharing that. All right, we've got Nicole. All right. I think I brought you up. Hold on, let me try that again. Okay. Nicole is here. How you doing, Nicole?
I'm wonderful. How are you? How's everyone?
Everyone's great. I'm doing great. Thank you. Yes. You had a question for us?
I do. Going over documents, and I wanted to know what's the best way to get those executed as far as having them and explaining them.
Which documents?
For buyers packet. One second, Nicole. This is actually not about like notary transactions. And the notary business or any business owner here. So I apologize if there's any confusion there. I apologize. Thank you.
Okay, no problem. All right. Any other questions here? Let me see. That makes sense. Thank you. Thank you for sharing that, Andre. All right. So, what I would suggest definitely is, one second. Okay. What I would suggest to everyone out there, small business owners, as you know, Camille mentioned, definitely check your accounts. Make sure now, early in the year, if your merchant account is attached to you personally and you now have a business that requires a separate filing, make sure that that's changed over. Make sure to have a business and a personal Cash App or PayPal, what have you, Venmo, etc. So this way you don't have any commingling. You can stop that now. Also, you want to ensure that you have proper record keeping, bookkeeping in place. So you need to have a record, preferably with a software. We use QuickBooks Online pretty much almost exclusively here at SDR. You want to have a record of every customer who paid you, how much they paid you. These different merchant services, take fees out. So you're going to need to see the gross amount that they paid because that's the amount that's going to be reported on those forms. And you want to really compare that, even throughout the year, just to make sure there's no discrepancies that you're trying to fix at year end. You could fix it now during the year. So get that bookkeeping in place. If you need assistance with that, definitely connect with us and make sure to separate those accounts and stop the commingling if you are already. And just know anyone who is providing a service that you're not an employee, and you're not an employee of whoever you're giving that service to, by default, you're a business owner. So it could be the side hustle, it could be the gig workers, it could be a full blown business. If you're collecting money from a customer for a product or service and you're not an employee, you're a business owner. So this can apply to many more people than may think. And so you want to be prepared. So I hope this was helpful. If there's nothing else, we're going to wrap it up. Thank you, Ebony. Appreciate the feedback on the tips here. And so this will be available on our Facebook page live. So definitely feel free to share it out. And just in closing, in case you joined us late, I'm Safi Russell, founder and CEO of SDR Consulting Inc. We primarily work with business owners, helping them with business startup and business cleanup services, as well as tax resolution if they do get into issues with the IRS. We're based in New York, but we have a virtual practice and we work with clients all over. You can find us online at sdrconsultinginc.com, on social media at SDR Consulting, and by phone at 516-255-6603. And I want to thank Christopher and Camille for sharing their thoughts today. Everyone, we're going to go ahead and wrap it up. So thank you for joining us and feel free to join us next Friday, 12 o'clock Eastern. Next Business Basics Friday will be live. Definitely take a look at the page and you'll get more details about the next topic and the next guest speaker. And if you are a business owner out there who provides services that can provide value to other business owners, feel free to connect with me and we'll definitely look to host some other guest speakers. So everyone enjoy your Friday. Have a great weekend. Stay safe. And once again, thank you for joining us here. Everyone have a great day. Bye-bye.